Hello and welcome to the Adansonia Capital Global Opportunities Portfolio Update for August 2025. This is our disclaimer. Please read it at your leisure. To move forward, I will take it as read. So for August 2025, the portfolio had a flat month versus the index that was up 80 bips. Overall, the portfolio continues to perform well. Since inception, it's up almost 17% per annum compounding versus the index, as we define as 15.3%. Over the months, the portfolio did not trade. We still have 13 stocks and around 7% cash. The cumulative performance of our portfolio since inception is on this chart versus the index, which is the MSCI World Net in Aussie dollars. So today we'll talk about Alphabet. We basically touched on this stock briefly when we had the quarterly call with Rob a few months ago. It's one of the larger holdings in the model and has performed very well. So effectively, Alphabet, as people would better understand it or recognize it as Google. Alphabet is the parent company, the holding company. Basically, Alphabet has market dominance in search, which is Google, and video streaming, which is YouTube. Basically, well understood programs or well recognized programs. But just to put this in some context, Google has over 90% of the global search market. With respect to YouTube, it's estimated that 90% of the global internet population, which is roughly 2.75 billion monthly active users, watch YouTube in over 80 languages. Further to that, YouTube also now has subscription services in YouTube Premium and YouTube TV, where people pay to use, and that's grown from over 100 million users from around March 24 to 1.25 million users in March 2025. So basically 25%. To give you a feeling of the size of the ecosystem as such, there's essentially 360 hours of content uploaded every minute on YouTube. So video streaming, or YouTube, has evolved to being just more than a place to load videos. It's really now a broader social media ecosystem and diversifying the revenue stream for Alphabet beyond just ads. Importantly, as you're getting a growing universe, Alphabet is also investing strongly in AI, and people recognize this as Gemini, which is their AI model. And AI is driving core algorithms to improve ad targeting and conversion performance. So as you search for something, it basically recognizes that and continues to basically target the ads to you. So as the addressable universe for Alphabet continues to grow through Google and YouTube, the advertising side of things on Alphabet continue to basically better target users and capitalize on the growing reach of Alphabet as essentially it basically onboards new users. So look, we talked about AI. Gemini is the AI model in Alphabet. It integrates very well with Alphabet's entire ecosystem. So obviously Google, etc., like that, provides superior complex reasoning and real-time web access when you compare it to ChatGPT. We personally believe it's a far better model than ChatGPT. ChatGPT seems to be able to hold a better conversation with you versus Gemini, but basically Gemini will delve down and give you more succinct and more clearer answers for more complex questions that you pose to it versus ChatGPT. A third arm or fourth arm for Alphabet also is Cloud, Google Cloud. So it's growing strongly, driven by the data-intensive requirement for AI. It's one of the three. It makes up the three key providers for cloud, which is obviously with AWS, with Amazon, and with Microsoft. And also one thing that really isn't being it's not priced in Alphabet, but it's other bets, and in particular Waymo, which is their autonomous vehicles. So with Tesla, which is trading on 170 times financial 26 earnings, all on the back of the blue sky for robotaxis. There is no blue sky for autonomous taxis or autonomous vehicles in Alphabet under Waymo. And it's basically in line or actually in front of Tesla in terms of the offering for autonomous vehicles. Again, driven very much by the strength of its AI moving forward. So again, there's a lot of blue sky here, and also with respect to other bets, they've started to invest in quantum computing, and they've got the Willow quantum processor, which basically supposedly going to provide a stronger performance than existing supercomputers. And again, there's really nothing in the share price for that. The last compelling argument around Alphabet is just evaluation. So again, you've got a company that's obviously one of the key runners in the AI race, and we strongly believe it's going to be a winner in AI. And when you adjust for other bets, which is essentially almost like a whole series of up and coming R&D companies, which are hemorrhaging cash or basically drawing on revenue, and stock-based compensation, which is non-cash but dilutive. Google is trading on around a 20 times PE for financial 26, so basically below that of the market. And this is for a company that's expected to grow earnings or double EPS over the next 5 years from financial 24 to financial 29, which is really quite exceptional. So there's a tremendous company with a very strong economic moat, with huge growth. That's basically trading on a very modest multiple, given the growth and the outlook and the long organic runway it has. And it's been a very strong performer, and we're very, very happy with that company in the portfolio and continue to be so. So anyway, look, that's the end of the update. As always, Tony and I are available on the mobile. The contact details bottom right of this page, or obviously through our website for a chat or an update anytime. Thank you again for your support, and I look forward to catching up with you in a couple of weeks for our September quarterly numbers. Okay, thank you.